Hello, everyone. Welcome to Money Map. Who? So, Bitcoin finally crossed $50,000 yesterday, and I'm sure that for those watching this channel, and you entered BTC at a very good price, perhaps below the 20,000 mark, I'm sure we have a very good reason to celebrate at this time. So today we want to quickly look at how to move forward from here. Many people will be thinking that this thing, for having crossed 50,000 dollars yesterday, that is surely overvalued. It's a bubble and it's going to crash background to the ground and stuff like that. Well, can we look, we'll really look at the history and see what has transpired and what has changed in recent times. So historically, Bitcoin exhibits some level of volatility in the past. This chart shows us the price movement and volume from 2015 till date. So you see from 2015 to about early part of 2017, it was like constant around below 4,000, just stable below $4,000. And the volatility started around 2017, and that saw the price moving to something quite close to $20,000 per BTC. And after that, a series of events occurred, and that brought down the price to about as low as $7,000 at some point. So at this point, I mean, many of us have been, we've been complaining about the volatility. Why does the price move up and down at such a fast pace and stuff like that? Now, what's really happening? Now we have to understand the factors responsible for that volatility, and that brings us to the issue of cryptocurrency whales. When we talk of whales, so cryptocurrency whales just refer to people who have large position in these coins, whether Bitcoin, whether Ripples, or any other one you want to talk about. They usually the people who got involved at the beginning of this project, and they usually have a lot, I mean, high volume of tokens or coins at their disposal because they were able to get it at a very low price, either because they were part of the development team or that they were able to buy it. They were the early adopters. Now, the issue is that why do we even call them whales? If we cast our mind back to the sea, and you see, whenever the whales are moving, they disrupt the flow of the water, the flow of the tides, and that really destabilizes others, the smaller animals or plants around that area. So their activity is quite unsettling, and that's why they refer them to as whales. Talking of Bitcoin specifically, I will notice that the three largest Bitcoin holders, they have about 718, I mean 7.18% of all Bitcoin. Just three people. You can imagine that much wealth. And to also talk about the top 100 wallets on Bitcoin, top 100 wallets account for 32.2% of all Bitcoin. I mean, that's still significant. So whenever these people, are doing transaction, and it's surely whether they are buying or selling. If they are selling, it means that price will go down. If they are buying, price will go up. So that's what happened with cryptocurrency way, and that's largely responsible for the volatility that we witness every now and then on various projects or coins. But the question is, what has changed? And okay, if we go back to this chart, it seems we have some level of stability since about July 2020. You can see that instead of the normal ups and downs, it's been largely on this chart just looking up, not going to the moon all the while. So the question is, what has changed? Now, in talking about what has changed, we have institutional investors now coming in, not the early tech adopters or the retail investors that have really, done a great job pushing the cryptocurrency narrative and make endearing many people to it. But now big companies are looking at this. And if you have been following this channel, you will have watched, you will have seen one of our videos that we talked about how people have how they distrust their various government and the fiat money that they issue because of the way, whenever things go wrong, the government can just go out and print new currency notes, which causes inflation because you now have more currencies in the circulation beyond the value of the goods and services in the economy. And so a lot of people are seeing this and they say, you know what, let's protect ourselves by going into cryptocurrency. Nobody is going to print any new coin in the cryptocurrency because many of the coins they have fixed limit in terms of supply. So we have Tesla coming in. If Tesla bought about $1.5 billion worth of Bitcoin, MicroStrategy, PayPal now accept Bitcoin on their platform. Same with Square. Even beyond those that are even officially disclosed their position on Bitcoin, we also have news about Visa, Mastercard, BNY Melon, all talking about moving here. So this is going to bring more stability into that space because these people have large volume that can counteract the effect of what the whales have been doing. And many of them, like Tesla taking $1.5 billion worth of Bitcoin, they are probably going to put it in their vaults and they will not use it to disrupt the market. So that's why we seem to be having a relatively improved stability in the market. So now, having explained this, let's now go to the meat of today's discussion, which is about how can Bitcoin get to $1 million. How can Bitcoin get to $1 million? So this is a very simple valuation model. So we looked at the 20 top top 20 countries in terms of GDP. So we have this figure, the nominal GDP as of 2017. So these are also the same group of countries that we refer to as a G20. At top of the chart, you have United States. At bottom, you have Switzerland. So you have many of the European powers here. So this does not represent the whole world. They do not represent the whole world. As a matter of fact, apart from China and the United States, Bitcoin even seem to have more adoption with developing countries. Of course, we discussed the trust factor, and in developing countries, you always have a very good reason not to trust, your government. So this is just a sample. But looking at this group of countries, we have what we call the addition of all this GDP is what we have now referred to as addressable markets here. So addressable markets, $64 trillion. What do we mean by addressable market? That means the market that Bitcoin can really take over. And we are using the GDP as a proxy for this. So what is GDP? GDP is the value of all goods and services provided in an economy. So we are saying that if all these goods and services, they were denominated in dollar and people decided, you know what, I'm going to use a part of all this value that we are creating. I'm going to use BTC to price it and transact in BTC. That will probably suggest, some people will start receiving salaries in BTC, some people will start paying rent in BTC, and all this paying for your bus fare and stuff like that, because all these activities represent what we refer to as GDP. So we are saying that GDP is an addressable market because the GDP is priced in so here now they are all priced in dollar, but somebody can just decide that, you know what, let's be using BTC for some of this transaction. And so that's just the explanation of addressable market. Then the next is the circulating supply. So what's the volume of BTC in circulation right now? There's just about 18,630,000. So you can understand that if the addressable market is so large, we're talking about even just G20 countries only, we're talking about $64.7 trillion. And all that is in supply is 18,630,525 BTC, and the maximum possible. So this has already been programmed into Bitcoin's protocol that the maximum supply is going to be 21 million coins, just 21 million. So whatever the value of the GDP, whatever happens to the addressable market, the currency is not going to change. And that's the complete reversal of what happens in the fiat world. When we say fiat, that means currencies issued by a central government. Wherever there is any economic difficulty or whatever, they want to achieve something, they just go out and print fresh money. They don't even tell you, so you keep having more money in circulation. But for Bitcoin and for most of other tokens and coins, it's fixed. The supply is fixed. Now, so the maximum supply is 21 million. Now, there's something we refer to as market dominance in cryptocurrency. What is market dominance? What portion of the entire crypto market um, is attributable to Bitcoins? Now, maybe we have almost about 1,500 coins out there, but Bitcoin alone, as at today, is represent about 79% of the entire cryptocurrency space. So we are saying that if that is the case, then we can now estimate using the addressable market, which I just explained, that the sum of all the GDP of all these top 20 countries, and assume that, assuming Bitcoin has even hit its maximum supply, which is 21 million units, and that assuming again that the market dominance still remains 79%, then now we now assume under various scenario that there is 1% adoption. So out of all these $64 trillion addressable market, 1% of it moves to Bitcoin. What would it be the price? So we just a matter of multiplying the addressable market by the market dominance of Bitcoin and the adoption rate, which is 1%, then divide that by your maximum supply. It tells you what the price of Bitcoin will be. So in the first scenario, we have $24,000, meaning that this mark has already been passed at 1%. Now, if there's 5% adoption using this model, using the addressable market we've talked about, then you will see Bitcoin at 122,000, because don't forget, the maximum supply is fixed. So whatever happens, so as more people adopt Bitcoin for their transaction, we are not going to have more Bitcoin in circulation. It's going to remain fixed, and that pushes up the value of the existing Bitcoin. So we are going to have 122,000. And using that same idea, we have a scenarios for 10% adoption, 20, 30, 40. If there's 50% adoption, meaning that half of the transaction being done in the whole world is being done by cryptocurrency, and Bitcoin still has the 79% market dominance, then you could have a $1.2 million price per BTC. So it's not, the question is not can it reach what we should, can it get to $1 million? The what we should be looking at is that can it be adopted up to that level whereby half of the global transaction will be done in Bitcoin. If that happens, then we will have a $1.2 million. So if anybody is looking at $50,000 as being the peak, that may not be correct, as much as people keep adopting it. Like we've said in our previous video, the young people, the millennials, the Generation Z people, they are the one driving these things at the first level. Now the big companies, institutional investors have also now jumped, into the fray. So it's quite doable, and so we don't think that 50,000 is the limit. We think that a 5% adoption for now, you sensing the behavior of various government, we need to regulate, we need to do this. We think we can get a 5% adoption for cryptocurrencies at the moment. So that's our view. We would like to hear your feedback. If you disagree, do not hesitate to talk about your disagreement. And we have our mentoring platform whereby our members will come at a more specific level and analyze various investment opportunities, the risks, the risk dimensions, the possible returns, and other events that happen frequently. And over a 1 year period, our members are able to really sharpen their skills and make many of these decisions and draw out insights from all events and manage their own finances by themselves, by own investing by themselves. So to join IMAP, just the link we provided in the description to this video. Please click and join IMAP. Thank you for listening. Please comment, share, and subscribe to this channel. Thank you, and do have a blessed day.